And I think that it's always important to begin life with a global focus, because what's the goal of every business in every industry? You want to be the dominant player in that industry. To dominate, you must be present everywhere. And if you look at Silicon Valley companies in particular, the examples are always there. So when Google launched on day one, they were accessible everywhere. The same product used in Denmark or in Portugal is the same product you use here. Same with Netflix, you name it. Same with Amazon, same with Facebook. So these companies from day one were global companies. And this is what allowed them to build products which were applicable worldwide. Had they only had a regional focus, they might have been very applicable regionally, but they wouldn't have been able to expand to a global and worldwide focus. So for all startups hope to be, I think they hope to be the dominant player in their space. The best way to do so is always to begin life with that view in mind, always build for global presence. And importantly, if you're delivering social impact, positive impact through your technology, through your startup, what better way than to have global impact? So building from global perspective from there too.
I completely agree. And I also think that that one of the most important things in relation to this is also that most founders are of the personality that they give their everything that they have. And as such, you don't want to be doing that for something, or why do that for something that isn't the biggest opportunity you can think of, and that you can imagine yourself trying to achieve. So in that sense, I also understand it from a deeply personal level why you would go for something that is as big as possible. But Shomit, maybe if we bring it very much down to earth and think of it as, you're this early pre-seed seed stage founder, you're going out to raise your first round of capital, and you're meeting the VC who says, I only want global businesses. If you aren't building global, I'll show you the door, as you said on our podcast. What does that mean for them specifically at the early stage? And how does that change their mindset? What are the specifics? And I know that you're very much health tech and health and data and IT together. So feel free, of course, to draw on examples from that sector as well.
Yeah, so I'll give a simple example here, but essentially, you want to size a market that's big. Investors care about big markets, and that's because this is how we end up getting paid, is exits within big markets. So we care intensely about big markets because this is what drives our success. Even as a founder, you care about a big market because otherwise you are the first investor in your company. So if you're an investor, you want to pursue an opportunity that gives you the most impact. If you're a founder, you're an investor, just as we investors are investors, we're all pursuing the same goal. So I think the number one question that will come up with an investor is, hey, Andreas, this is a great story that we know we're going to hear from you. How big is the market that you're addressing? And they really want to see that there's a big market there that's accessible. And that will then imply the business model. And the business model, if you want to have global impact, needs to produce economic benefit on the other side of the world as it does in your home country. And you need to be thinking about things like that, is how do you craft a business model that's equally applicable here as on the other side of the world, which is what Facebook does, Google does, Netflix does, Amazon does, etc. So having a business model which is equally profitable locally as it is as remotely, and then what are your plans for being able to take your product and make it accessible globally? How do you go to market? If it's on the internet, great, it's kind of instantly available around the world. But if it's not an internet-driven product, if it's data signature from an IoT device, how do you make that also ubiquitous around the world? What are the distribution partners you can leverage so that you don't have to try and go sell those things directly yourself? All these things will come into the discussion, but by being able to discuss and illustrate and position these things, the investor is able to see that Andreas has a global mindset in mind, and he has a way of getting the product out globally. If you can be globally dominant, and it's a combat between him, who's globally dominant, and a company that might just be locally dominant, who's going to win? It's the globally dominant one that's going to win.
Yeah, and that's actually something that I very specifically want to ask you about, Shomit, because uh, it's one thing going for a big market, and going for let's call it uh, going for a global market, because the US is super big as well.
Yeah.
And you could definitely go for the US market as well, and still reach a super big market opportunity. But that is so your answer to that, why would you have to go for the global market?
Yeah.
Because you can find many billion-dollar markets inside the US.
Yeah.
When you would say you need to go for the global market, that's out of the competitive perspective, that you have so many, you are going to have global competitors. So for that reason, you're also going to have to go for the global market, even though you have a billion-dollar market as your home market.
Yeah. Yeah. Actually, and I think we can take a clue here from what happened in the auto industry. The U.S. auto industry, which came into its pace right after the Second World War, dominated the U.S. auto industry, and it was automobiles built for the U.S. market, and they just happened to sell elsewhere because the rest of the world was still suffering the after effects of the war. But we had a product that worked well in the U.S., which we were selling elsewhere in the world because the rest of the world really didn't have a product to bring.
Yeah.
What happened after that? Well, companies from other parts of the world started competing with products which were applicable worldwide, weren't just tuned for the US market. They were tuned for markets in Africa and Asia and Europe, South America, et cetera. And where has that competition ended, right? So if you look at some of the dominant vendors of automobiles today, Honda, Toyota, et cetera, they came from a base of building cars which were applicable and sellable worldwide. And this is the danger.
Actually, it brings up something I have thought about, which is that you have let me just fix something here. That you have in the US, you have Tesla, and you have now a new player, Rivian, I think they're called, who are building their flagship car, which is a truck. And I heard an amazing statistic that says that 75% of all cars sold in 2019 in the US was actually trucks or 4x4s and so on. So that amazed me and had me thinking, okay, well, did Tesla do wrong in not building the Cybertruck as their first truck or their first car? But you would say that that's because the rest of the world don't have that very weird buying pattern of focusing on the super big.
That's right. That's right. Yeah, that's a great point, Andreas. Exactly. And where does the threat to Tesla lie? It might lie from, because Tesla sells a very high-end product, which works well here. It works well in high-income countries. Is that their path to success, or will they find competition from below, from auto manufacturers who are able to bring that electric technology into products that are more scalable, more able to achieve that global scale? Which would then, should that happen, it would push Tesla just into being, a luxury car vendor.
Yeah, clearly. Now, but then my next question is, because as an early stage founder, you are all the time thinking, at the same time you have this global mindset. You're fighting that you also have to be expedient in every decision that you make, and you need to be close to your customers and get feedback all the time. And as such, as a Danish person, it might be very, very easy for me and tempting to focus on my Danish market. How does a founder best balance this? What is your experience there?
Yeah, so I don't know that there's a silver bullet answer on this, but I think fundamentally you need to realize that you will be a global company. Just having that realization is a big part of the battle. That's part of the battle. Then practically, how does this play out in day-to-day life? So people on this call are probably familiar with this whole philosophy of the bowling pin strategy. So how do bowling pins work? They're arranged in a triangle. The first one has 2 behind it, 3 behind that. If you hit the first one well, the force from that translates into knocking down the two behind, the three behind that. So in technology and startups, if you can factor what it is that allows you to be successful in that first market, so you'll also be successful in the two subsequent markets and the three subsequent markets, you can actually focus your efforts. Just as in bowling, you don't need 10 balls to knock down 10 pins. It's the force of that single ball hitting the first pin well that factors into knocking down the subsequent 9 pins. Yeah. The same thing within technology entrepreneurship. Can you factor that first market that you're addressing, which might be a local market? Can you factor that so that it also applies in additional markets? Not factoring it well, for example, would be to make your product super expensive. Yeah. Super expensive doesn't scale very well. So how can you keep the friction for your product as low as possible from the economic standpoint, so that not only can you sell in a high-income country, but you can also sell in a low-income country? If you only build a product that will work in the high-income country, guess what? You will no longer be globally scalable.
Yeah. Then every founder, many of them know the theory of beachhead markets, and then they'll say on the pitch stand there that this is my beachhead market, but how do they? What I find is that many struggle to then say, okay, but what is it that's replicable? Do you have any tactics, both in terms of in general finding that factoring ability, and also in communicating that to the VCs, that what are the essential elements of being able to tell that story convincingly?
Yeah, so there's I think the philosophical answer and maybe a practical answer. The philosophical answer is maybe go through the mental exercise of thinking, what would be the toughest market in which for you to sell? What would be the toughest one? How would you sell it successfully? Because if you can solve it for the toughest market, you can figure it out for the easiest market. So I think that's a really useful intellectual exercise. So that's the philosophical answer. The practical answer is also, if you look at things like AI, machine learning, big data, these ubiquitous data signals we have everywhere from IoT and mobile phones, things like that, what they enable is non-contact solutions. If you think about fintech today, why is fintech so powerful? Is because it's non-contact. We can capture a lot of data signals about you without you ever having to walk into a bank and give us your tax returns and your paycheck stub. It's non-contact. We can harness all these other signals. So Andreas may be out tilling the field on a farm, but he can qualify for a loan based on non-contact signals. The same is true within healthcare. In the current model, we have to go see, it's a contact-driven model. I have to go see Dr. Andreas, and he'll look at me and say, okay, here's what you need to do, and away I go. And I buy some drugs, or I get a medical device or whatever, and I get better. That's wonderful, but what scales even more is non-contact. And this is where healthcare technology is going today. How can we diagnose what's going on with Shomit without him seeing the doctor from his data signals? How might we be able to prevent what he's going to come down with? In some instances, you can even treat using data signals. So you may know that the FDA here recently, but that the one I'll cite here, they've done a few of these, but last year they approved treatment of ADD using not pharmaceuticals, but video games. So it's a digital drug. And how scalable is that? You don't need to have access to a pharmacy. You don't have to incur the cost of a pharmaceutical. You can access that medication, quote unquote, via non-contact means through your mobile phone. So that kind of solution is scalable. And the companies, for example, that are driving forward aggressively, companies like Google through their Verily subsidiary, they're leveraging all these data signals to be able to provide non-contact diagnosis, prevention, and treatment.
Yeah, definitely. And I think one of the questions that we will touch a lot on later on is the scalability of business models, and how do you test for that and think through that. But I think that right now I want to pay some respect to Daksh Gagas, who sent us a question. He's asking the question that, since existing technology is bound to go cheaper, is it suffice to rely on this theory and project future increase in market share? So basically just saying, since what I'm doing is something that will be cheaper and cheaper, I am bound to end up overtaking the more expensive incumbents, and that is my defensive moat. Is that a
Yeah.
fair rationale?
Yeah, let me actually reframe that a little way because as you may recall from past discussions, Andreas and Daksh may know because he's a student in one of my classes, but there's a concept of commodity versus anti-commodity. Okay, so commodity is everything you think about, everything mankind produces is a commodity. The more you have, the less it's worth, right? Whether it's cars, cell phones, if diamonds were spilling out of the trees, we'd be paving the streets with diamonds, right? They're commodities. The more you have, the less it's worth. Data is an anti-commodity. The more you have, the more it's worth, which is why if you look at companies like Google, Amazon, Facebook, Apple, et cetera, they're all in the anti-commodity business. They're collecting as much data as possible because the more data you have, the keener your insights and the more accurate your insights. So I think the play here, how do you make something as scalable as possible and still maintain defensibility? It's by capturing an ever larger data signal. And of course, always doing that ethically. I think one of the perils that we're running in today is that some companies haven't given enough attention to data ethics, and either by intention or by accident, they're running into these very public censures that they're facing. So I think this is, go ahead.
I was just about to say, and you mentioned fintech earlier, and
Yeah.
you know, one of the strongest forces behind the blockchain community is, you know, them having seen fintech exploiting for years, if not for centuries, and the same thing, or not fintech, but established banking industry and established people with money,
Yeah.
and we're seeing the same thing about social media, right? Because everyone is expecting Facebook to, you know, they either going to have to adopt the blockchain in a way where they can say, now we don't no longer just siphon off your data, or they're going to be supplanted by someone who has it built in that they cannot just do what they will please with your data.
Right. And here, I think this is one of the things that fintech is doing is they're bringing scalability. So of course, there's always risk in data, but there's also social equity. So today, let's say I want to get a bank loan and I deserve the bank loan because we need financial resources to live our lives. And I go in and talk to the Bank of Andreas, and the Bank of Andreas says, I'm a traditional legacy bank. Shomit, I need that credit score, income, and assets. But I don't have that because I'm a fresh university graduate, or I live in a region where I don't have a credit score, I don't have regular employment, I don't have assets that I can cite. I still deserve the loan. But if I'm measured against the traditional measures, I don't get the loan. So how do you bring scalability so that everyone who deserves access to finance gets it, whether you're a fresh university graduate or you just happen to live in a region where these measures don't exist? Well, this is where the data comes in. And this data allows you to provision services to a far greater market than you can today. Not looking at traditional signals, but looking at additional signals, that whole thing of data as an anti-commodity. And so this brings scalability. The Bank of Andreas today may be thinking, oh, to expand my business, I'll have to open a new branch in Portugal so I can address the Portuguese market. And there's a lot of costs associated with that. But it would be much more effective for the Bank of Andreas to expand not the number of branches, but the number of data signals so that consumers in Portugal can be addressed and consumers everywhere, you know, in Kenya, India, Malaysia, et cetera, can also be addressed. And this in the end brings social equity and it brings scalability.
Yeah. You said a couple of times here on data ethics and also the data as an anti-commodity and what you need to build the business on. That 12 months ago when we had our podcast interview, I challenged you and said, so what is the most interesting business with doing this that you have seen? And I would love now to challenge you again. Who are they? And maybe also start out by putting it in the context of building globally. Maybe say a bit about that.
Yeah, I think this is something that we can talk for a really long time because a lot of smart people in all parts of the world have figured this out and they're putting together solutions that have huge impact. So, you know, the well-known companies are companies like Square. Square is doing a wonderful job of capturing data signals to be able to do things like provide financial products into small businesses. You know, you may have seen that there was a headline in the Wall Street Journal Square can provide small business loans of $150,000 from their app. This is how strong their data signal is. But think of how scalable that then becomes. It may be that Andreas's coffee shop in rural Denmark somewhere can't get access to capital because he's in a small village somewhere and does not have the background which shows that he has the integrity to pay off that loan on time. But Square can capture that and understand the integrity of you as a business owner because of all the data signals they look at. Square has been super successful. I think their market cap is 120 billion, something like that, which is way bigger than Goldman Sachs, for example.
Yeah.
So that's a really well-known example. I talked to an academic entrepreneur from Finland earlier today, and he's developed technology to monitor our physiologic signals via really like a second skin, a small patch that you can apply. Really brilliant. But here you can see, how can you provide continuous healthcare, scalable continuous healthcare? Today, if you have a chronic condition, particularly if you're in an under-resourced area, you don't have the resources to be treated on an inpatient basis. It may be that you need to be treated on an inpatient basis, but the medical care system just isn't resourced well enough to do that. And yet you still deserve that medical care, as do all of us. What if we can provide that same level of monitoring, that same level of care by something that's very cheap, scalable, and non-contact, such as what this academic has developed. So these are the kinds of things that I kind of see on a day-to-day basis. Every day I see something. So could I put my finger on just one thing? My happy answer is no, because there's just so much of it going on. And this is what excites me. So, talked to this individual from Finland this morning, and I'm thinking this is a great way to make healthcare ubiquitous and accessible, not just here in the developed world, but also in the developing world where people don't have access to the same resources.
And just a shout out to everyone, Shomit can't say no. So you guys just reach out to him, try and get him involved in your businesses. I'm sure he's super thankful that I'm saying this. Just before this call, Shomit told me that he's struggling under his own philosophy of never saying no.
Yeah, you've given away my secret.
Yeah.
But it's a dark secret though, because I do tend to say yes too readily, and this gets me overcommitted, unfortunately. But it keeps life exciting.
Yeah, it certainly does. Shomit, we used Daksh is from before, one of your students. Shomit is responding in the chat saying that he is very kind. So we'll take his word on that. I can also vouch for Shomit. But Shomit, we talked about, or we used to in the VC industry talk about a lot about TAM, total addressable market. But now we are seeing more and more VCs that are progressing to thinking about total potential market. But that awakens in me, and I think in many founders, the question, when is potential okay to focus on? Because if I'm building a market or building a business, a solution for a market that's not there yet, how many inflection points can it be out? How many years can it be out? And can I be the one who's the driving force behind enabling that inflection point? Or should it be inflection points coming by themselves and I'm just catching them, and I don't think anyone else have seen them yet? What are your thoughts here?
Wow, there's so many questions there. So yeah, and they're all great questions. They're all part of the same string. So let me see if I can remember them. I think investors are always driven by the future, right? We're driven by what's going to manifest and define what's going to happen in the future. And as you know, the current path to exit for an acquisition is something like 6 to 8 years.
Yeah.
Current path to an IPO is 8 years plus. So it's a long horizon that we're investing behind. And it's what will be relevant, not in 2021, not what will be relevant in 2025. It's what will be relevant in 2027, 2028, 2030. So we're always investing in potential.
Yeah, and maybe a note on that, Shomit, because I think that there we have also seen before that you would exit a business to an IPO or secondary or a strategic when you had realized much of your opportunity already, where we're seeing now that VCs can actually exit at an IPO at a huge valuation without having gotten to that stage yet. So that even means you don't look for something that in 8 years will be fully diffused or dispersed in the market, or put in the market. You're actually looking for something that in 8 years will be evident to everyone that it will be, because that is actually what's driving valuations at IPOs today, rather than
That's
what's
right.
your business fundamentals.
Yeah, that's right. And in the end, it always comes down, if the business is to be sustainable and to be relevant over the long term, you do need to have long-term fundamental business value. So the IPO notwithstanding, you may have a really successful IPO, but if you can't sustain your business value, then whoever your investors were at that time will lose their money. So I think in the end, business is always about fundamental sustainable value. And as an investor and also as an entrepreneur, I think this is the lens with which you need to view opportunity, not to the opportunity of, can I sell this and make a bunch of money? Certainly that works, but I don't think that's the right motivation. It's, can I build something that has sustainable value? And what is that? I think that's the best target.
I completely agree. Shomit, we've got a question from Sheila Pereira, and it actually goes. I'm quite sure that we have just launched an episode with Jay Schuyler from Venture University.
Saw that.
And he, one of the things that's actually in the one coming out with him tomorrow, but one of the things he says is that when he looks at European entrepreneurs are actually oftentimes more global in their mindset than American entrepreneurs, because we have such small home markets, so we are more quick to adopt the global mindset. And that of course leads to Sheila's question, which is, what are the key differences in terms of mindset that you're seeing in European versus US VCs, and of course also founders?
Yeah, I think American investors and American entrepreneurs are maybe a little bit more brash, and they're willing to make bold assertions of what they're going to do and have bold plans. And as you say, European entrepreneurs and investors may be a little bit more conservative. Neither one is right nor wrong. There's a happy balance in between. So it's discovering what is that happy balance. I think each constituency can learn from the other. So we in America can learn from the conservatism and practicality of the Europeans, and the Europeans can also learn from the big, bold visions of the Americans, right? So each can learn from the other.
And that's funny, because Jay Schuyler said the opposite thing. He said Europeans were more global in their mindset from the beginning than Americans, and that surprised me a lot. I would have said the same thing as you, Shomit. That you see much more bold ideas coming out of especially Silicon Valley. And I also, because Sheila, you ask about the mindset of the VCs, I'd also say you definitely see that difference in the investors in the US versus the investors in Europe. Because what we have in the US is we have, first of all, we have angels who are much more diversified in their portfolios, because in the US, an angel will often only do $5,000 or $2,000 investments, and then have a portfolio of 30, 40, 50, even hundreds of companies. Whereas in Europe, we have much more of a culture of almost putting all your money in three baskets or so, both on the angel side but also on the VC side. We don't have many VCs in Europe playing the numbers game in the same way as you have in the US. So spray and pray, you don't see that in Europe almost, but you have many seed stage, pre-seed stage VCs in the US shooting out quite a lot of investments every month. But Shomit, don't you agree that is a difference in the two mindsets of investors?
I do, yeah. My view is, I think, the same as yours, Andreas, and what I've seen both with entrepreneurs and with investors. And again, neither is the right nor wrong approach. I think both have their merits, and we need to be tempered in how we think, whether we're Europeans or Americans or from elsewhere, so that we can apply, the best views and the best thinking from other places too.
Yeah, that said, I'm curious to hear how you see Europe, or sorry, the US learning from the European mindset here,
Yeah.
because as I see it, founders are probably oftentimes better off by playing a more safe game, because they have all their savings basically and everything in one single company, to which the VC looks and says, now we are one in my portfolio, and I'm rooting for you and I'm doing everything I can, but I am expecting that 90% of my portfolio won't really be big hit successes. But what are your
Yeah.
views?
Yeah. No, I think this European entrepreneurs have a hidden strength that they may not realize. And so this is it. So let's think about the issue of ethics. So let's say, Andreas, you were to say, Shomit, I'd like to introduce you to G. He's brilliant, he's funny, he's smart, plays the guitar, but he has no ethics. Would I take the meeting? No, neither would you. Nobody would, because we value ethics so highly. I think it literally is probably the most highly valued human attribute, because even bank robbers, if you and I were bank robbers, we have to trust each other. Otherwise, if you don't have enough ethics, when you run out of the bank, you shoot me, take the money, and run away. Ethics is so important, right? And this is why ethics is so important in business. And I think in Europe, because of things like GDPR and just also a very broad societal awareness of the impact of data ethics, I think European entrepreneurs are able to come to market with ethics first as a foundation. And that places them at a competitive advantage, because as we've seen with so many of the big tech players here, I think it's like literally once a month, one of them is getting fined. Right? It's like not a week goes by that you don't see one of them being fined. Yeah. Whether it's done by accident or on purpose doesn't really matter. It's the fact that it did happen. So an advantage that European entrepreneurs can bring is this really intrinsic understanding of what does it mean to have data, things like data ethics. And this places them at a competitive advantage, because as we just said, ethics is probably the most highly valued human attribute. We need to know that we can trust each other. So this is something that I think that European entrepreneurs can traffic on, is just putting that forward as one of their key differentiators.
I highly agree, and same thing for VCs. I think that it is a super long relationship you're going into. So VCs and investors, anyone listening in here, if you haven't realized it yet, it's a trust game, both on founder side and co-investor side and LP side. So that is the name of the game. And for the founders hearing me say this, do really think every time you meet a VC, does this guy seem to be a truly good guy? Because you're going to need him to be. But now I want to dedicate the rest of this session to questions that we've gotten from the community, because we had a few beforehand, and then we've had two now in the chat. And let's start with Babak Hussaini. Babak, you're asking, what's the biggest mistake you see European entrepreneurs do when pitching US VCs?
I think talking about local regionalized markets. And it's too often that I hear that to be the case, is that their plan of going to market is regional. And that's fine to an extent. You can't build a globally dominant business from a regional viewpoint. So I think when we see when we as investors see startups come in here, the startups come in, never once do they say, we're going to dominate California. California is the world's 5th largest economy. Yeah, so it's a massive economy here. No one would get a minute longer in an investor pitch session if that's what they said. Or if somebody even came and said, we're going to dominate the US market, which is a huge market, right? Every entrepreneur comes in, here's our product, here's how it's globally applicable. It's just an expectation that will be the story that's told. And I think that to answer Babak's question, that's probably the biggest mistake that's made, is that there's this whole regional focus of here's what we've done regionally. And, if we're really successful here in Copenhagen next year, we'll cross the water, the Malmö, right? So the thinking needs to be broader than that. So the solution that you've come up with, it deserves to have a global impact. It deserves to have a global impact. So tell the story so that this is so.
And maybe to unpack that a bit, Shomit, because that's what I'm seeing, that you have you have to follow it up with everything in your pitch deck and everything in your business. It's not enough for you to say that I'm going for a global market and it's 5 billion or whatever. And then when you get to see your projections, or you get to see your plans of going to market, and you can just see that the ambitions here, even if I fueled you with all the money and you've given me your plan, or you've said that this is what you're going to do with the money from pre-seed to seed round or seed to Series A, I can just see that this ambition level will never ever get me to a global business in 6 or 8 years.
Right.
And that is where I'm seeing that you have such great slide twos on page 2 on slide decks that talks about a global market and a global need and so on. But then when you get further down, you notice that the business model will never scale. You notice that the ambitions aren't scaled up either. Would you expand on that a bit?
Yeah, no, excellent point. Yeah, as you said, slide 1 and 2 are great. Slide 3 doesn't live up to the promise of slide 1 and 2. Yeah. So yeah, it does need to be a full spectrum, holistic story that you tell. So here's the big market. Well, how do you go to market worldwide? Oh, here are the distribution partners we're working with. We're going to be partnering with these worldwide presence, big companies who have complementary products to ours. That's how we're going to take it out to a worldwide market. Okay, great. How do you defend yourself against global competition? Oh, it's all about the data signature. And because we're collecting data signatures from everywhere in the world, we're defensible, more defensible than companies who are only collecting a data signature that's local.
Yeah.
And if you think about, go ahead.
Now, I was just about to add to that. I heard the founder of Superhuman say just the other day that that when you have a global mindset, that is when buying a domain upfront for $200,000 doesn't seem that outrageous, because you're already 10 years down the road in your mindset. So that's why it makes sense to build on the back of superhuman.com instead of obscure email system.com.
Right. Yeah, exactly. Yeah. And think about here, like in the space of healthcare, because healthcare, as with financial services, this is a human right. We all deserve it, no matter where we live, no matter what our demographic is. If your data signal is localized, how applicable is it elsewhere? Which company is going to win? The one that has data signals from populations in Asia, Africa, South America, North America, Europe, et cetera, or the one that have a data signal from Northern Europe? Who's going to win?
Yeah, completely correct.
Right. So this becomes part of your technology strategy. So, hey, Andreas, great story. So how are you going to buttress and fortify yourself against competition with your data signature? Oh, well, I'm collecting it from all these very portable devices, which people have everywhere. Wonderful. That's how I know you're going to stand up. Yeah, that's how I know you're going to stand toe to toe with the big tech players.
Yeah, absolutely correct. Teddy Lufström from our community is also asking a question. He's saying, what is the best versus worst pitch you have ever been presented? And what are the complete no-go zones for us as entrepreneurs when pitching to investors?
Yeah, that probably write a book about this, but I think keep it short and simple. People understand short and simple. Focus on the business model, because people, in the end, business is driven by economics. So what is the economic advantage for what it is that you're doing? And does it solve a big enough problem? Big problem with an economic driver beneath it. And then you can talk about the team and technology, but it's really about the business model, the big market, and the economics beneath it. That's a good pitch. And I see those all the time. I also see bad pitches, and I've seen bad pitches which have been literally, no exaggeration, 45 pages of technology. And already when the entrepreneurs send me their slides, I thought this is not going to go well, because they sent me 45 pages and it's all technology. And probably the worst one I ever saw, and I've seen a few that aren't that good, but 20 minutes in, and this is supposed to be a 1-hour meeting, 20 minutes in, the entrepreneur showed a slide which had a waveform on it. I have no idea what the waveform was supposed to be telling me. And I started watching my watch, because at 20 after, he started talking about the waveform. At the end of the hour, when the meeting was supposed to finish, he was still talking about the waveform. So what else did the company do? I have no idea. Right, but it was bad enough that I noted when he showed the away from it, looked at my watch to see how long would he talk about this.
Yeah.
Talked about it for 40 minutes.
Yeah.
This is not going to go well.
And-
Business is about business. Business is not about technology. Technology is only there to support the business. So keep the discussion focused on the business.
Yeah. And Shomit, maybe expand a bit on, because you said before also that I'll show you the door if you don't come with a global mindset. But then you also say, I'll spend 40 minutes hearing you out. What are the cues that entrepreneurs should take to be able to recover from either a meeting that have gone awry because they can see, okay, Shomit isn't listening anymore. I actually want Shomit as an investor, and I realize that it's not working what I'm doing right now. How do you get out of that? What cues do you get from you?
Yeah, excellent question, Andres. I love that. So I think go into the meeting realizing that it's an interaction. It's not a lecture. So an interaction requires that I'm giving you information both explicitly and implicitly, and I'm collecting information from you implicitly and explicitly. So it's an interchange. So if I'm telling you something, I'm watching to see how is that registering with you? What's your body language? Are you smiling, you're nodding your head, or are you sitting back with your arms crossed? And nowadays, especially with so much being done over Zoom, we don't have a lot of cues, right? So if I'm just yammering on and on and on, and you've already dozed off and I don't notice, or if you've mentally dozed off, your eyes may be open, I need to be open to getting these cues back from you. It's really an exchange and interchange. And by doing so, you maximize your chance of communicating your story. And you also communicate to the investor that you're both human beings and you've actually formed a bond and a relationship, right? It wasn't a lecture.
Yeah.
So just bear that in mind. I highly recommend keeping it informal, friendly, conversational. Don't lecture.
Yeah. We have promised Shomit that we'll end 5 minutes before, because he has a important meeting to one of the Yes Man groups that he can't not join. So I'll have to end it first. Let's see if we can make it to these two questions, and we're super happy. But I want to get Anthony Miller's question in. He's a founder coach, and he is basically asking what your thinking is around founders' own self-belief and confidence, and how it impacts their end results.
Yeah, I think that this is an important question. Founders need to have some confidence. They also need to have some humility, because overconfidence is a peril. If I think, hey, I got it right the first time and I don't listen to the customer, or I don't even listen to the investor, I'm going to go out of business. So you need to have certainly confidence. Otherwise, you're not going to embark on what is, in the end, kind of a professionally and financially perilous path. So you need to have the confidence that you can pull it off. But you also need to have the humility to say that, I didn't anticipate that, or I hadn't thought of that. What does that tell me? How should I adjust? And not only is this a learning for all of us who've done this as entrepreneurs ourselves, but if you look at the academic work that's been done, Startup Genome Project found that successful startups pivot 1 to 2 times. Mm-hmm. Okay, and I think that number is a great number, because if you pivot 0 times, too much confidence and maybe too much stupidity. You didn't listen to what the customers told you. And if you pivot 3 to 10 times or 20 times, well, then you've got no confidence at all, and you change your thinking every day. You never focus and you never converge. But that 1 to 2 times shows that you're able to listen and adapt. I think that's really a nice magic number. So yeah, you need confidence. You also need humility. So it should never be that you're the smartest guy in the room.
Yeah, and Shomit, thank you for at least making me absolutely not the smartest guy in the room.
Hey, I'm not the smartest guy in the room. Sorry.
That's G. I know. I perfectly know that. He is Davidson, my right hand. He makes sure that everything actually works. So that's G in this situation, and that makes it your fault, G, because you are in the wrong room. Then, Shomit, thanks a million for joining us, guys. I'll wrap up, but now I'll just say bye to Shomit and Jeroen. We will get to your question. Not in this chat, but I am sure that we can follow up either with Shomit or with at least a bunch of resources, because you're asking a question about the internal tech stack of VCs, and that's some research that David has actually been working on for some time. So Shomit, thanks a million.
Thank you for having me, and thank you for everyone else for having been here. It's really been my pleasure and honor, and look forward to keeping in touch with all of you.